Okay, dollar Swiss has moved 500 points in the last couple of months. We was up peaking nearly 0.95 at the start of March. We're now peaking just below 0.90. So understanding price action where we're currently positioned is key. Breaking 90 is a psychological point for a lot of investors and traders. So we understand that that whole round number has and does hold a bit of weight around it. We really need to understand what type of phase two this is. In a downtrend, we typically look for strong sellers, weak buyers, strong sellers, weak buyers. When our weak buying in a downtrend becomes strong buying, this is when we typically see a reversal and onwards and upwards the market goes. Considering we've had this huge decline over some recent time, over a year now, we can see that price is now starting to run out of steam, and we've had slightly stronger buying coming into play as we reach these current lows. This is what we call the monthly S2, so a significant point to look for potential reversals. Anyone that has an idea of a double bottom reversal pattern, inverse head and shoulders, price action, which we typically see in change of phase, change of trends, that's what you want to be looking for in and around that 0.90 and below 0.90. As soon as you break, we'll confirm buying sentiment, look for momentum, dollar stronger than the Swiss franc, and back up we go. So what that tells us, in recent time, the Swiss franc has been incredibly strong. Now, if we look at a currency pair I currently have on my watch list, which is Swiss yen. Swiss yen is now sitting at 150. Again, another psychological point. This yellow line here is a level of resistance that I've personally put in that meets my requirements. When we're drawing our support and resistance, personally, I recommend starting with what we call hard levels of support and resistance. These are your ceilings and your floors, your tops and bottoms, which will help you build parameters for strong turning points. What too many new traders do is get caught up plotting levels absolutely everywhere and really miss the understanding of having an extreme area to look for a high reward trade within a reversal. Now, just taking a look at this Swiss yen chart, you can see that every time we've been up at this 150 area, we've struggled. So if we're playing a game of probabilities, which is what trading is, you can see I've rejected it 4 times, or this is the 4th time. So after 3 rejections, we'd expect the 4th to also reject. It's telling us that price action doesn't like behaving up in this area, and we should look and consider for a potential reversal. If we go back on our monthly chart, you can see years and years ago, back in 1980, we was up at the same point. So price has been here before, and historically doesn't like staying above our demand area up at 150. So these are the type of areas we call extremes, and that's where you want to be looking for your reversal. So monthly showing a potential double top formation, which will be highlighted slightly clearer on a weekly time frame. This price action candlestick here is what we call an exhaustion candle. Typically the largest bar within the phase that isn't at the beginning. We're showing buyers running out of steam at the high points. Our next couple of candles we want to see like this, which I call a high test bar. Indecision candles, inside bars. Anything telling us the buyers are running out of steam is going to be the ideal opportunity to take that trade. So let's take a look, right? Dollar, you can see dollar's sitting as a potential double bottom of 102. I'd like it to get above 104 at least. If we look at a daily time frame here, you can definitely see that the sellers are not as weak as they were when we were typically selling here. So if we start to see dollar perk up, perhaps up here to the monthly pivot, we then look at dollar Swiss, taking into consideration dollar strength. I'd like price cycling above 90. That will give us 2 clear cycles above an area of previous support. So that's our confirmation of trend onwards and upwards. And then if we take a look at Swissy yen, we want to see price reject that 150 mark. If we take a look at a weekly time frame, you can see the previous phase 2 come right down into 139 from 150. So you've got a long old journey there with lots of opportunities to scale in on the smaller time frames should we look to come back to our pivot in here and break that low in there. All good, guys? Couple of Swiss charts. I want you to go and do your own homework now. Look at other Swiss opportunities. Plan your trades for next week. Look for extreme areas to identify high reward reversals, then chop into them multiple times on the smaller time frames. All the best, guys. You take care.